Good morning, listeners, and welcome to the Trade Talk podcast. Today, we'll start with global markets and global cues as they are more important to decide the next course of action for our markets. Federal Reserve Chairman Mr. Powell made clear Wednesday that the central bank is close to done raising interest rates, but his colleagues delivered the message that resonated. Borrowing cost must remain higher for longer amid renewed strength in the economy. In quarterly economic projection released following a two-day policy meeting, 12 out of 19 Fed officials said that they still expect to raise rates once more this year. The bigger takeaway for investor was the revelation that policymakers see fewer rate cuts than previously anticipated in 2024, in part due to a strong labor market, and this has actually led the more weakness in the overall market, especially Nasdaq went down sharply. The projection also showed they expect inflation to fall below 3% next year and return to their 2% target by 2026. It means the soft landing for US economy that looked more remote 3 months ago seems within reach. Broadly, we are of the view that this is going to impact emerging markets in the short term as well as in the medium term, and it will minimize flows for all these emerging markets. That will keep the limited upside for our markets, and the market is also reacting to the same. Since the last 2 days it is falling from the highs. Yesterday also we saw a good amount of sell off in the market, and Nifty was down more than 224 points for the day. Now we are heading towards the next important levels. 19,850, 19,750 is the range where we should look for adding some long positions, because there the market is having excellent buying support. Yesterday when we were talking about 20,000, we were not of the view that the market can fall to these levels, but because of HDFC Bank, Reliance, we saw a good amount of sell off, and that has actually sent the market below the levels of 20,000. In fact, it has also broken the level of 19,000 during the day. So for the day, we are specifically going to keep a close watch on 19,850 and 750 levels. Between these levels, we should look for adding some positions with a medium-term view. We are not expecting market to sustain below the levels of 19,700. On the higher side, as we mentioned, now 20,000 is going to act as resistance, which was earlier support for the market. And in the best case scenario, we may see the levels of 20,100. For the bank Nifty, 45,000 is the support level, and between 45,000 to 44,900 we should be a buyer in the market. Yesterday we saw some activity or buying interest in almost all the NBFCs. So today we need to focus on NBFCs if there is any correction in the first half, so that if there is any revival or reversal in the market, then again these stocks can do well. That's all from my side for the day. With this, I'm ending today's morning podcast. Thank you very much for listening me. Have a great day to all of you.